I thought I had everything handled. Never really worried too much about the financials. Always been pretty good at managing projects, managing crews, but, the money side of things, I figured if I just made enough, they'd probably take care of it. Then I saw my tax bill. Knew something needed to change. That's more common than you might think, especially for someone who's running their own successful business, but I think I can help. Today we're diving into a case study with James, a 55-year-old general contractor in Mesa, Arizona. James makes $300,000 a year and has built a solid business, but he wasn't taking advantage of some major tax savings available to him. I'm going to walk you through exactly how I helped James save over $12,000 a year in taxes, improve his insurance setup, and create more peace of mind for his family and his employees. My name is Grady Cool, CEO of Cool Wealth Management. At Cool Wealth Management, we focus on three things: ethics, holistic planning, and personalized financial strategies. I'm going to show you exactly what that looks like today. So tell me a little bit about your business. I'm James, 55 years old. Been in the contracting business for 20 years. I have a wife and 2 kids. Outside of that, I got 5 employees, a few subcontractors here or there. Got it. Do you feel like you've been on top of everything financially, or do you feel like you've just been getting by as far as workload goes? Honestly, just kind of keeping up. I've always been good at making money, but not always so much keeping it. That is totally fair. Is it all right with you if I ask you a few personal questions to maybe better tailor things to you in specific? Fire away! What was money like growing up? Things were pretty tight growing up. My dad worked in contracting too. My mom, she was a secretary. But outside of that, every dollar counted. We felt when things didn't go very well, car engine breaks, such and such. That experience usually sticks with you, hardworking, but cautious. As far as adult life goes, are there any sort of investments that you have particularly strong experiences or feelings with? I'm not in anything fancy. Like, I bought a rental a few years ago. I decided that wasn't for me, moved into my own house. Other than that, I save in the business and in my 401k on occasion. That helps. The goal here is to make a plan that you're comfortable with while still moving the needle forward. Are there any other goals that you have in mind currently? I want to make sure that my wife and kids are taken care of if anything were to happen to me. It's dangerous business on occasion, and other than that, I'd like to start winding back on work over the next 5 to 7 years or so. After reviewing James' financial picture, here's what we found. James earns $300,000 per year as a high-performing business owner. His monthly expenses included $10,000, which were mortgage payments, utilities, transportation, groceries, insurance, and discretionary spending. He also spent $1,500 a month on things like vacation and having fun. James has accumulated $180,000 in his 401k, consisting of target date funds and a money market option. It also leans fairly conservative with only about 40% in stocks, with the rest primarily in bonds. As far as an emergency fund, James keeps $25,000 in a high-yield savings account. He also owns his home, which is worth $850,000 with a mortgage balance of $390,000, which currently has an interest rate of 6%, which he makes minimum payments on. Based on your current situation, here's what we would recommend. First thing is an emergency fund. Getting up cash savings to $84,000 for 6 months worth of expenses so that you have your family covered and the business can stay in business if anything were to happen. So I'll be rich and boring. That's how we like it when things go wrong. Next big thing is a term life insurance policy. This isn't going to be individual. This is going to be directly through the business. Now, the beauty of this is that it helps with employees as well. You can write off the taxes for their policies on things like premiums so that you'll be saving over $12,000 a year in taxes. Then it can help with things like being able to keep operations going if something were to happen to you. Key employee retention, they like it when this is actually available to them, and it takes care of your family if anything were to happen to you. That's a lot of money. The Bahamas are calling my name. Yeah, they are. Now, health insurance, you have this available to employees, but you can actually deduct some of the premiums on your taxes, similar to any other business expense. There are certain rules, but we can definitely help with that side of things. This should make it so that you're able to, yes, keep important employees, but also be able to save quite a bit on taxes along the way as well. Even better. As well, we'll rebalance your 401k so that it's a little bit more aggressive with 70% stock and 30% bond. That way we can be able to deal with inflation over the long term, build it up a little bit while you're still working, and then as you get older, we will slowly make it a little more conservative more and more over time. Sounds good to me. The next big thing is maxing out your 401k. Because you've hit age 55, that means we can put in $31,000 a year, which means we can lower your taxable income and be able to grow your retirement fund so that you can have more comfortable retirement. Outside of the 401k, we'll also be putting away $5,000 a month to make sure that you can actually have money for other parts of your life. What this will look like is, first, we will build some up into a money market fund. Then the rest of it will be in a long-term brokerage account where, similar to your 401k, 70% stock and 30% bond, growing over time. To tie everything together, we have two last pieces. For one, there's having a trust so that if anything were to happen to you, all of your assets actually go to the right place. Beneficiary designations are great for things like your 401k, but doesn't save you from everything. So to avoid probate court and making sure things actually go to your family, then we'll have a trust. I have a guy who can help you out with that part. And the last piece is having an exit strategy for your business, making sure that you sell it to someone you actually enjoy, and then two, getting a good exit price by having your financials in order and making sure that we are maxing out how much we make each year and minimizing the taxes. This will get us a much better selling price. This was a condensed down version of things, but should give you an idea of what things are like with a real client. Sometimes there are more questions, other times there are more or less needs, but there always seems to be something we can do at least a little bit better. If you want to talk about your particular financial situation, please go on my website, book a call, would be happy to help. Other than that, I will see you in the next one.